What's up, everyone? It's Scotty with Money Vesting. So, Tesla released another report suggesting price cuts in China for their Model Y. The stock price is down a little bit over 2% to pre-market, trading now under $240 per share. So, we're going to discuss exactly what's going on. Of course, go over the price cuts, the report that came out a few hours ago, and also talk a little bit about Tesla's margins, what this does to the stock price, where's going to be that next technical support, and why covered calls are the way to go right now, because the price obviously is coming down, and that's acting as a very nice hedge for us at the moment. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. We'd love to have you on board as a Money Vesting member. 16% annual discount available till the end of this month, and you get access to all the buy and sell alerts, options alerts, trade ideas, including the intrinsic value spreadsheets, and of course the members-only private videos as well. In fact, I did a video for members over the weekend going over 4 trade ideas that I see potential in the weeks to come. So again, link's going to be down below if you're interested in joining. So Tesla cuts prices in China for some Model Y versions, and again has cut prices in China for its Model Y long range and performance versions starting on August 14. The company said in a notice on Monday, and the car company dropped the starting prices of both Models Y 14,000 wons, and that's going to be just about under $2,000 discount, and the price drops 4.5% to 299,900 wons, and starting price of Model Y Performance is now just under 350,000, down 3.8%. I've also been looking at prices over here in the UAE, and there's been a lot of discounts going on for Teslas over here in the UAE as well. And of course, Tesla has already done a lot of price cuts. They have done a lot of price cuts here in the US, in the UAE, in China, in a lot of parts of the world, and even in Europe over the last 6 to 8 months, even the last 12 months. And that's been one of the reasons why, of course, demand substantially is higher. The deliveries and the production numbers continue to be very, very strong. But of course, Wall Street is not liking all these price cuts because that's affecting the company's margins, right? The gross margins, profitable margins, and that's affecting the bottom line earnings per share as well. So if you take a look at what the company's reported in the last 4 to 5 quarters, even in fact in the most recent quarter, in the second quarter, you'll notice that the gross margins were pretty much just over 18%. And they have been consistently coming down from 25% down to just over 18%, and net margins, which is very much, or even the operating margin, if you come take a look at this, from 14.6% to now under 10%. And that's exactly what Wall Street does not like for Tesla at the moment, and the stock price is down a little bit over 2% last time I checked. Right now trading at just under $237 per share, a little bit under 237 now, down over 2.3% at the moment. So, price cuts has been the story of 2023 for Tesla. They have consistently slashed prices in a lot of different markets in 2023, and that's really causing for Tesla price to come down. In fact, it's come down from, just about under $300. It got up to that level in the middle of July, and since then it's just been dropping, now down over 20% from those levels. And again, we talked about this, right? We've talked about how the price itself became a little bit more on the overbought side because Tesla has seen nothing but a significant rally since April of 2023. It's rallied over 96, almost 100%. And it's exactly one of the reasons why I was focused on selling calls on June and in July, and they are going to be up very, very nicely. One of them is already up close to 62.5%, up $2,700. And the other one, which is a little bit already in the money at 210, is up 28%, up almost $2,000. And I'm pretty sure after the markets open today, this right here is also going to be up very nicely. Right now it's down about 4%, just about $165. But I'm pretty sure that as soon as the market opens today, this one's also going to be in the green. So we are going to be taking profits here on these calls as soon as they get up to 85, 90, closer to 95. For these ones specifically, I'm going to be focusing on 100% return, so I'm going to be letting them expire, whether it's in the money, out of the money, depending on where prices are in November and December. And the reason for that is because I rolled these options out, right? So even though I received a net credit, I did roll these options out, so I want to be able to generate all that premium And I'm gonna allow for these options to pretty much expire right at this point. I mean, whether it's in the money, out of the money, I'm not going to touch them, and they are going to just expire by November, December, depending on where Tesla price is, whether it's above or below my strike prices. I'm happy to deleverage and of course de-risk a little bit of that position and get rid of some of the shares, and also of course generate some premiums along the way. But the bottom line is that, as we've already talked about, this is a very, very short-term hiccup for the company. It's not really a hiccup. It's really just something the company is doing, and it's able to take advantage of an efficient process, lower cost of production of the vehicle, and of course spurring some demand in an interest rate environment which is very, very high, right? So the demand itself, the organic demand, is not that strong because interest rates are higher. We talked about the auto loans, which have literally just skyrocketed from 2 to 3% to now over 7%. So you're not really seeing a lot of demand for new vehicles, right? Prices for used cars and vehicles overall have come down from, during the pandemic levels, and there was a significant shortage of chips, and as a result, the demand completely outstripped the supply back in 2020, 2021. Now we're seeing a little bit of a normalization period where the demand isn't as high as the supply now, and for those reasons, of course, Tesla is still able to take advantage of lowering the price, continuing to see higher volumes and demand, but the long-term play is not, making money on electric vehicles. But in my opinion, at least, it is going to be on software, services, FSD, a lot of different products that they're going to be launching and that have higher margins for the company. So, of course, Wall Street's going to be a little bit more short-sighted with respect to margins and with respect to these price cuts, which do indeed affect margins. But that being said, technically speaking, we are starting to break down a little bit more. This right here inside this green rectangle is going to be that support level to watch. So anything inside this level right here is going to be a very strong support area. I've talked about this before. 240, if it's not 240, then low 220s, 225, 228. Around those levels is where I could see Tesla kind of settle in, and even as low as low 200s, because that's exactly where that green rectangle is for us. Previous resistance potentially acting as a new support, even previous support level here for Tesla, and of course an old resistance here. So that's going to be that area to watch for Tesla, where I do expect Tesla to kind of stabilize a little bit. So I hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Let me know your thoughts in the comment section down below. What do you think about Tesla's price action right now? Do you expect more downside? Do you expect Tesla to rally back higher? What is going to be that long-term trajectory from you? But right now, of course, selling off 2.5% at the moment on these price cuts, which again is a little bit going to be short-sighted from Wall Street, but gives us the opportunity to take advantage of the covered calls that are going to be very much out of the money, some of them in the money, some of them out of the money. And of course, long-term gives us the opportunity to dollar cost average at our fair values. But of course, Tesla's fair value is still a lot lower than where it's trading at the moment. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below. As always, 16% annual discount available till the end of this month. Happy investing. I'll see you all in the next video.